Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at the marijuana sector. First up is canopy growth. All right, so yeah, this had a rough day today, closed down 8%. They did announce a direct offering of $2.5 million down here, Canadian. It looks like down here they announced on Tuesday. They also did report earnings. So in line with analyst expectations, they had a net loss of 90 million Canadian. So yeah, I would take a look at their at the earnings. So they are in 11 countries, and they still are the world's leader. They're just under immense pressure right now. What you have here is 3 days down in a row, and it came down here and it's hitting this closing price here on the 20th of July, and so this is going to be the key support zone to hold. There is a small gap, if you look back here in May, between the 11th and 14th of May, and so it looks like if the share price came down here and hit this 200-day simple moving average at 23.75, it could come down, fill that gap, and then have a technical bounce off that level. That would put it in line with this July support zone. It's all about holding this basically 24 support zone. Come down here, hit that 200-day simple moving average and bounce off. It's going to be downside risk if it breaks below that 200-day simple moving average. You could see it come down here and possibly test these lower support levels, down here at 20 and 21. So this is going to be crucial. It needs to stay above 23.75. Keep in mind that this gap back here, it did end up filling, and so gaps get filled. It doesn't matter, especially for this being a marijuana sector stock, having that unfilled gap on the chart was a red flag that at some point it was going to come back and fill that. Unfortunately, that it's attempting to do that now. It almost filled the gap back here in July, but it didn't quite fill. So this would be a good time just to get it done, have a bounce, and then see if we can get a reversal going. If you look here at Constellation Brands, all right, so this is the maker of Corona beer. This has been the play. While the marijuana sector has been under pressure with Canada, they came out and said that they were, now that they're not going to allow retail sales in dispensaries, I guess, until the April, I believe it was, of 2019, and so that was supposed to happen in October of this year. So that's throwing everything off, and so that's throwing pressure on the sector. But STZ is rocking it out right now, and it does trade options, and so today the call options were up huge. If you look here, we've got there was a almost 2,500% gain just today on these on the August 17th 220 strike calls. Now this was alerted in our chat last Thursday when it was making that bullish move back above, bouncing off of this middle Bollinger Band, and so yeah, we were looking at this as a as the calls were in play back here, as it got above the middle Bollinger Band and was starting a new uptrend. And the key on this play was the middle Bollinger Band did hold at 213, and then today was the big payday. It shot off like a rocket. It busted through the 50 and 200 and 100-day simple moving averages, and so now what you want to see is it stay above that 100-day simple moving average. It needs to stay above 221. If it dropped below, that would be a red flag. That would be a sell signal. It would signal consolidation. It might pull back down here, test that 50 and 200-day simple moving averages. Now if it could stay above all these three levels, it could get moving. Keep in mind it's hitting just above, it's going to hit the bottom of the gap resistance level. There's a gap between low of day on this candle or low of day on this candle and high of day on this candle, and so when it runs up here to about 223.50, that's gonna be hitting the bottom of the gap resistance level, and that is always a tough level to break. So if it starts stalling out in that zone, that's where it could take a breather. Now if it busts through that gap, what you're looking for is a gap fill and a run up to 228. All right, so yeah, that was a very nice move on a big volume spike, and yeah, they do own 10% of Canopy Growth. Okay, let's take a look at MJ here. This is the Alternative Harvest ETF. It's under big pressure. This is a weekly chart. It's down 5% this week. Relatively light volume. It's not like heavy volume. It's just the buyers are not stepping up. Everybody must be on vacation. As you can see here, this chart is getting ugly. It's down here testing 25 support. And so that's putting it back over here in the January of 2017 support zone. And so if it breaks below that, what could happen is it could come down here into this November 2016 to January 2017 channel that it was in before. That's down here just above 224, around 225 or so. And you don't want to see it dropping back into that zone. You know, what's happening now is the candles are riding the pink line lower. That's EMA4 at 2630, and as long as they're riding that level lower, the signal is to either be on the sidelines or be short. Definitely not be long. You know, this is, especially if you're a long-term investor, you only want to be long if the candles are forming above the pink line. They need to be riding that EMA4 support higher. This is just a signal that the bears are in control. You know, your money's just tied up if you're sitting in this thing. This is just a good barometer for the for the marijuana sector, but it isn't a pure marijuana sector ETF. It does have tobacco companies in this ETF as well. That's why it's the alternative harvest. So a more pure marijuana ETF is the Horizons Marijuana Life Science Index, and this is the basket of the foreign Canadian companies, the publicly traded companies, and so it's right now under a lot of pressure as well. This is the weekly chart. As you can see, it's down 7% this week. You've got the Fasto, you know, pegged down here at 1. RSI is really losing strength. You know, it's down at 39 right now, but it's not at 30, so it could push lower. If you look here, it did drop below support at April. You know, each candle on this chart, it represents 1 week of trading. And so that drop below this week, below this April low close, is a red flag. It really needs to get back above that level. That was the bottom of this channel. Okay, so it had been in a channel for multiple weeks, and so it's breaking the bottom of the channel right now, and so that signals downside risk. That signals downside risk for the Canadian marijuana companies, and so right now it is riding EMA4 resistance lower, just like MJ. It needs to get above 1185 and close above that level for the week, and then it needs to get back above that 50-week moving average at 1246. That's going to be the big level right there. It has to get back above. If that 50-week moving average is resistance, you know, it's just going to be another signal that this downtrend is intact and that the bears are in control. And so it's similar to this pattern over here. You can see how it paid to be long and just riding as the candles were staying above the pink line. You know, that paid. Well, right now it pays to be below the pink line if you're short, but not if you're long. And so look how long this thing dragged out. You never know how long they could drag this thing down. You know, sometimes the marijuana sector does not really run until December and January. Those are the prime months for the marijuana sector. So I'm not saying it's going to stall out till then or anything like that, but I'm just saying that that has historically been the best time of year for the sector. And so as you can see here, look at the run that happened here. It happened during, you know, November, December, January. It's the winter months, you know. Check out back in August and September. You know, it started moving down in September. So, you know, we'll see what happens here. They're shaking the tree, and we'll see if the marijuana investors step up to the plate. Now take a look at GWPH here. Okay, so this is trying to get something going here. You know, it still has very light volume. It closed up 1%. It's down here clinging to the 200-day simple moving average at 132. That's the red line right here. It needs to hold that level. If that level broke, then it could come down here and test the bottom of this channel, which is down here at 127, and so that would be a red flag. It would put 127 on deck if 132 support broke. And then what you want to see is a break back above these moving averages. You have the middle Bollinger Band and the 100-day simple moving average. And then the top of the channel is lined up with the green line, which is the 50-day simple moving average at 144. If it were to bust above 135, that's what you would want to see it work its way back up to, back up to the top of the channel. So, it was at the bottom of the channel, the top, the bottom. It's trying to get something going here, but it has to stay above that 200-day simple moving average at 132. Okay, take a look at Cronos Group. Okay, so this stock is beaten up right now as well, down another 3% today. You have Fasto pegged down here at 5. It's been below 20 for a while. It got above for a couple days, but it's been down low. This has the ascending triangle pattern where you have descending resistance, and so that could come down this way here. I drew two different trend lines here off the top of that one, and then down off of these candles. And so basically, you have the pattern winding tight here, and so it's testing the horizontal support, which is down here. You can see the closes all on this line here. So in my opinion, it's all about 550. It's got to hold this 550 support zone. If it were to break below 550, that would be a major red flag, and you could see it come down here and test the 300-day simple moving average at 484, or possibly come down here to fill this gap. It looks like there's a gap from back here in December between these two candles. I was having a hard time seeing if there was a lower wick on that candle, but it's either if there isn't a lower wick, then it's up here. I was having a hard time telling, but to me, it looks like there's definitely a gap down here between high of day on what is that? That's the 23rd of December and low of day on the 26th. And so if it broke below 550, there's a good chance that it comes down here and fills the gap. It almost filled the gap back there in February, but it didn't. I prefer having gaps filled for penny stocks, especially. You could have a stock like Apple or something that might not fill the gap. That they have breakaways on earnings or whatever, but gaps do tend to get filled, and especially for the penny stock. So that would be the target if 550 broke. Okay, take a look at Tilray. So ticker symbol TLRY. This had a horrible day today. Man, that was not good to see. This thing got punished, down 9%. So congrats to whoever bought the puts. I mean, the call on the chart was actually to exit. Or to have bought the puts yesterday, and that would have this probably doesn't even trade options right now. No, it doesn't, because it's an IPO, but that would have been a heck of a move with the 9%, right? And so basically though, the strategy, sorry about that, is right here on the, because the GWPH Cronos Group, Canopy Growth, you can trade options. And so that's the nice thing, and the same thing, of course, with Constellation Brands. So they have you can trade the marijuana sector through options, and so that is a bonus. And so here you have got the black candle. Notice that there was multiple white candles in a row, followed by a gap up open with this black spinning top. This was the signal to lock in gains. That there was an unfilled gap here. And so we were just talking about the gaps, and so notice how there was a gap up open, and there was still a space between high of day on Friday and low of day on Monday, and so the space got filled today. The gap filled. Unfortunately, it dropped back below EMAs 4, 8, and 13. If you've caught my other videos, it became back in play on this candle here when it got back above EMAs 4 and 8, and it needed to stay above those levels to remain in play. So today, dropping below does signal downside risk. Okay, so it was today was the sell signal, and then because we don't have a lot to work with since this is a very short history of trading. It's best to follow the intraday charts, and those did break down. And actually, they probably broke down on the 13th. Let's see. We'll look here at the next chart. So what we look here is a possible drop down to 22. That would be the low close. That's the all-time lowest close. So that would be the if things got nasty, down to that level would be the key level to hold. would be down at 22. Okay, I'm not saying it's necessarily going to drop that far, but that's the you know, that would be a key support level, because if it dropped below 22, it could really get moving lower. You know, you have 20, just above 20 as the all-time low. And so, yeah, if you look here at the TLRY, that's right, with this 15-minute chart, this is like a 10-day 15-minute chart, and it's showing here, you know, the breakdown. It's now below all the moving averages, so you have this downtrending channel the last 2 days. You know, it made a high, and then it failed to you know, make a higher high, and then it's come down here and it's dropped below all the moving averages, and it's below the 300 simple moving average at 2454, and so it needs to get back above this blue line. You know, if that remains resistance, it's going to be a major red flag. It needs to be above that level to be pushing higher, you know. And so right now it's you know, it started this downtrend, and so it's gotten below the middle Bollinger Band here on this big red candle, and that signaled the downside risk. And so right now 24 is the big support level, and then you have this 2350, which was the you know, this was a big resistance level before it broke out above, and so you'd want to see that 2350 hold on a pullback. Okay, let's take a look at IIPR. Yeah, this is that real estate marijuana company. You know, they purchase real estate and then they lease it out to different companies that are in the cannabis industry. And so, yeah, they have like big buildings, yeah, big square footage. Yeah, and so this is a bearish setup today. It had that nice move, and then it went up and it hit the double top level, and then today it closed down 3%. So it had filled the jar. It had made a top over here on the 11th of June, and then it came down here, bottomed out at 32, and then the upper wick on today's candle, that filled the jar at 38.50. And so, or that was yesterday. It filled that jar, and so it was needing. It needs to still in the future break above that level. Once it closes above 38.50, that's going to be your signal that it's ready to break out higher. Now today, bearish engulfing reversal pattern formed. This is a really strong reversal pattern, and man, that's a very hardcore candle, because there's no upper wick or lower wick on the candle. First trade of day was high of day, and the last trade of day was low of day, and it pretty much means that the bears were in control the entire day today. And so what's going on now is there is a gap. Okay, so gaps are very important. Notice how many times in this video we mentioned gaps. You know, if you learn gaps, you'll be able to, it'll help you with trading, because you knew when there was a gap up open on Monday that this gap would eventually fill it sometime, and it looks like it's going to get filled sooner than later. And so, yeah, you definitely don't want to load until after it fills the gap, and then look for a bounce off of the 50-day simple moving average at 34.90. Okay, it's going to be a red flag if that 34.90 breaks. That's going to put the 100-day simple moving average and middle Bollinger Band back on deck. It has to hold this 33.50 support zone. If it fails to do that, then the new uptrend is broken. So this did the old fill the jar, and so now it's going to have to break out of the top in order to take it to the next level. Okay, take a look at ACBFF, Aurora Cannabis. Man, this has gotten super ugly. This is like altcoin ugly. You know, if you're looking at, like, this is like Ethereum kind of ugly. If you've looked at an Ethereum chart lately, the way they're just, you know, you should check out, if you haven't seen it, the crypto video that I put out yesterday showing, yeah, just the bloodbath, the carnage, and yeah, this has a very similar looking chart, retracing to the same levels. I mean, this is almost mimicking that the Bitcoin run. I mean, it's crazy, because this had a breakout in November, and that's exactly what the cryptocurrencies did, and then they peaked at the same time, and then now this has dropped back just like it. You know, it's just following the altcoins. And I'm not saying that they're correlated. I'm just noticing that on the chart, and yeah, this is dropping hard right now. What's going on is it's got some gaps, and so there's this gap down here that I think didn't quite fill on this candle, and so it looks like it could come down here and fill this gap that's just below $4, and so look for a possible bounce if it fills that gap. Now the risk is that there's not a whole lot of support here, so it really needs to bounce in the zone. You know, it needs to hold this 4 support zone just below, bounce off of it, and then get a reversal going. going, because if you look here at back in November, it was a parabolic move, and so there wasn't a lot of trading to help create support at key levels, and so there's not going to be a lot holding it up on the way back down. And unfortunately, there's the unfilled gap back here in November. And so, down here around 275, it could drop down to that level and fill that gap if, it fails to get a reversal going. And just to throw salt on anybody's wounds that's long ACBFF, sorry about that, but there is even another gap. I didn't want to have to do this to you, but yeah, it's all the way down to 250. So theoretically, if this is just on, and then you've got another one. See, there's just too many gaps, you guys. The gaps just kill you because they get filled in pennyland, and this is such a bloodbath that that the market makers are salivating over filling gaps. I don't know if all these gaps will get filled, but believe me, whoever's driving this lower and been pretty much shorting this since up here when it peaked, it's just been a bloodbath. They would love to hit these twos down here. So you have 1, 2, 3, 4 unfilled gaps below for Aurora Cannabis that are all potential targets. I'm not saying they're going to get hit. Right now it's below all of the moving averages on the chart. This is as bearish as it gets. It's busting below the lower Bollinger Band, so this is where it really needs to bounce. A lot of times when you get below the lower Bollinger Band, it will bounce. But if you look over here, it's gotten below the lower Bollinger Band and it's ridden it lower. When you get a big pull below like this one right here, you do get a nice bounce many times. Other times like this, it closed just below and it's just riding the lower Bollinger Band lower. It worked its way back in, and so we'll see right now if it can get a technical bounce, work back into the bands. If it does, you want to see this 400-day simple moving average, and then it's all about EMA4 at 443. The 400-day simple moving average at 439. It has to get back above that levels. Once it's back above those levels and they turn into support, that's when it can get an uptrend going. Okay, take a look at Aurora Cannabis. Okay, this is ACBFF. This is the weekly chart or the monthly chart for this one. Okay, so it's down 25% for the month, and so as you can see here, the reason why I wanted to show you this chart is because of the break below the middle Bollinger Band. I thought this was important to show. It's hitting the key support level right now. The middle Bollinger Band is currently at 437. Now, granted, we're only halfway through the month here, or not even. There's still, there's still, over 2 weeks left, or at least 2 weeks left, right? So tomorrow's the 15th, and so yeah, there's chance to be able to have this monthly chart correct and get back above that middle Bollinger Band. But if there's a monthly close below the middle Bollinger Band at 437, that's going to be a major red flag. There hasn't been a close below the middle Bollinger Band since back here in 2016. And that's not what anybody wants to see. That's long Aurora Cannabis, arguably the number 2 cannabis company in the world. The only thing is the dilution. That's been the big Achilles heel for these companies. They're their own worst enemy with constantly selling shares. And so we'll see. It's all about 437. I would keep that number written down if you're in Aurora. And if it's staying below that level, that is signaling downside risk. Okay, so let's look at APHQF. Okay, this is Afria. Okay, so this is another one of the top dogs. It had another bad day today. It closed down 9%. Look at RSI. It's down here at 31. So it got below RSI, below 30, which is the oversold level. It got below that level on the drop down here in April. And so, it might take a break below that to get a good bounce going. You have Fasto at 431. You could look here at minus DI, and you can see the levels that it's hitting right now. It's hitting the prior level where it peaked before. Notice how minus DI, the red line, okay, how it peaked right here, and that's lined up with where it bounced. Okay, so that, like many times when it gets extreme to the upside, that's a contrarian indicator signaling that it could possibly bounce. Now it could break out above that level, but that would, look how many times it's hit this level, and that's where you've had the technical bounce, okay, each time. And so, you know, is it going to break out above and head to new levels, similar to what happened over here with plus DI? You know, plus DI is the other direction. You know, when it gets going too high and up, that's when it gets a pullback going. And so, yeah, so we'll keep an eye on minus DI. Just trying to share some information. Yeah, so let's look here at the chart here. It's got this descending triangle type of pattern as well, and it's breaking down below all the moving averages. Okay, so it's busting through that lower Bollinger Band right now. It's below the 400-day simple moving average. If you look over here back in November, once again, I mean, this is just so much like the crypto altcoins, because I just did the video last night, and you know, I went over this about it's like the same setup. You know, it's crazy. It's like they broke out in November, ran up to January. They peaked out. This is like $20. That this is like Bitcoin hitting 20,000, and then they've just been fading it ever since. And so, yeah. Maybe it's going to take cryptocurrency to get running for the marijuana sector to get hot again. No, I don't think there's necessarily a correlation. Historically, I'm just trying to make a little bit of fun here, because you know, it's not a good situation for the people that are invested in the cannabis sector. You know, for this constant you know, downtrend, the heavy pressure, and yeah, it's making it tough for people to get invested, because they're getting shook out left and right. Historically, like I said before, cannabis does historically run during the winter months there, during the holidays, heading into, you know, usually December and January is the hot months. And so this is just the normal pattern, and it just happened that Bitcoin ran during that time as well. And so, you know, there's been multiple years where the marijuana sector has run during those winter months. And so a lot of times it cools down. You would think that it would have a harvest type of rally, you know, that it would you know, be running in the harvest time, which I guess that would be November or whatever, would be just after October. And so yeah, so here we go. We got this gap down here once again. It's all about these gaps, you guys. You got to find them on the charts. You know, you can see this gap filled right here, the first one in November with these candles. It broke below the bottom of the gap level. And so bottom of the gap level turns into big resistance. So it's going to have to get back above 7. And, you know, it has to get back above the 400-day simple moving average, and it has to get back above EMA 4 at 725. Now to the downside, you've got this gap, next gap, which is down by $6. So it's likely to come down to 6 and fill that gap. If it came all the way down here to around 525, that would fill that would make sure that the two gaps below are completely filled. And if they did fill, that would be a good level for a technical bounce. And so, not necessarily saying it's going to drop that far, but you know, it's down here. Might as well just fill those gaps and then provide a better entry point for people at lower levels. Okay, let's look at CVSI here. Okay, so this is in a really nice uptrend. It's up 6%. It has a really strong daily chart going here. And you know, I've showed this before. It's riding EMA 4 support higher here at 463. And once it closes below that level, that's when it's going to you know, take a breather and consolidate. That's going to give you a chance to make a trade. You need to be on the lookout. Check out that big volume spike here. There was a big volume spike, and then the upper wick on today's candle. You know, this could be a temporary climax spike, you know, where they take a breather here. That this is kind of the setup for it, where you have, you know, increasing volume pattern, you know, on the way up while it's pushing. You're getting higher and higher, you know, larger and larger volume bars into a big climax, which is a volume bar that's larger than all the previous bars, and then you've got the upper wick on the candle. And so this is that climax spike candle, climax spike type of setup that I see on the intraday charts that signals the lock-in gains. Not saying that this is a lock-in gains necessarily scenario right now, but just saying you need to be on the lookout, because you know, nothing goes straight up. It could take a breather, and once EMA4 breaks, that's when it could, you could see it pull back, possibly test $4. Okay, let's look here finally at CANN. Sorry for such the long video here. If you look here, I just want to throw this one in. It was bouncing and it closed above EMA4 today. That has been resistance during the downtrend. It's bouncing off of the support from back here in April, and so if it can stay above EMA4 and you see it trading above EMA8 at 240, it could get moving to the upside. Check out the green dots. That's parabolic SAR. They're getting ready to flip below, and so if it can get above that 240 and break above 250, then that middle Bollinger Band at 269 would be the target. So it just looked interesting because it closed above EMA4 for the first time since you got to go way back here, and so back in July, the first week of July. So yeah, so keep an eye on CANN. If it drops back below EMA4, that would signal it's not ready to go. Okay, thanks for viewing this video. Really appreciate it.